I want to teach you guys is what we call SLP. I'm coming. SLK. So this is the strategy. SLK. This S stands for structure, right? While this L stands for liquidity, and this K stands for key level. You understand?
Okay.
So other people choose to call this same strategy. I'm coming. Other people choose to call this same strategy Malaysian S and R. S and R. Something like this. R. Something like this. So this M stands for Malaysia. Why this S stands for support, this L stands for and resistance. So this stands for, oh, sorry, I'm coming. So depend on the name you call it, but actually we call this SLK. So SLK stands for structure, liquidity, and key level. So mainly, what I'm going to teach you guys tonight are like, I want to show you guys what key level looks like. You understand? So that tomorrow we start with market structure. Maybe we talk a little bit about basic market structure. We go deep into advanced market structure with other topics along the way. So we are going to be having at least 3 sessions in a week. You understand? 3 sessions in a week. So I'm coming. Let me delete this. So there's what we call V-shaped key level and A-shaped key level. You understand? And we will be using line charts a lot to identify our key level, our A-shape and V-shape key levels. So we might not be using the, like after analysis, we might not be using the line chart on our screenshot, but during analysis, like for you people that are still new to SLK, you might have to like use line charts to mark out your key levels because it is more clearer on line charts than candlesticks. You understand? Like this is an I'm coming. This here is an A-shaped key level, and let me show you V-shaped key level here. This is a V-shaped key level. This here is a V-shaped key level, and this is an A-shaped key level. So A-shaped key level is for sell, while V-shaped is for buys. You understand?
Okay.
Yeah. And we have what we call open close. Open close is also part of key level. Let me go to daily time frame to be more clearer there. Okay, so you see this gap between these two bullish candle here. This gap here, this is a key level also. This is a key level. This here is a key level. This here is a key level. The gap between these two candles is a key level. When this if this candle closes and another candle begins, where that candle closes is where the key level will mark out the key level from. Sorry. Something like this is a key level. As you can see, this market tapped into this zone and rejected. You see this market rejected from this key level here. So we should be looking for more sales because this key level is for sale. Like, can it be the market like did something like this, broke above the key level? Okay. Had it be the market broke above this key level, we'll expect something like a retracement to the back to that same key level that got broken. Then we expect a buy to the upside. But in this situation, I'm coming. In this situation, the market rejected it. So we'll go deeper into how to make analysis. We'll go to 4 hour time frame, look for break or structure or sweep and a break, go to the 1 hour and find all that stuff there to like align with our what we are looking for before we can form up a setup. So for now, I'll be teaching you guys how to identify key level. How to identify key level is very, very important. You have to like train your eyes to understand key level very well. So if you look into this chart currently, you see that this is an V-shaped key level. This is a V-shaped key level here coming. This is a V-shaped key level. And this is an A-shaped key level that got disrespected. Market broke above it. Let me go back to the normal chart. Do you see what happened here? Okay, let me tell you guys something. Let me show you guys something. Let's say we have an A-shaped key level here, right? What do we expect from the market? We expect that if this market comes to this particular, expect the market to sell. But if the market break above it, what do we expect? We expect the test of that zone, that particular zone that got disrespected. That is more like a flip zone for those who trade supply and demand, and those who also trade support and resistance. You know, in this market, like basically everything we all trade in this market is no more than support and resistance and supply and demand. Depend on what people choose to call it. You understand? Many people call it other blocks or ICT people. They call it different names, but it's all fall back to support and resistance. You understand? So please, your mic. Please mute your mic to avoid distraction. So the same thing happened to a V-shaped key level also. Let me show you guys also something here. If you have a V-shaped key level here, a V-shaped key level, what do you expect from the market? We expect that the market should come to this V-shaped key level and buys. But in this situation, if the market break below it, we expect a retest of that zone. Then we expect a sell from there, more sell from there. You understand? So anytime a V-shaped key level got disrespected to the downside or got broken to the downside, the same thing. We expect a retest of that zone. Then we expect more sell. The same thing happened to an A-shaped key level. If an A-shaped key level got disrespected, we expect a retest of that zone, then we expect a buy to the upside. I hope you guys understand what I'm trying to say here. Can you guys say? Yeah. Okay. So the same thing. We also have the same thing on these open close candles. Let me find an example here. Open close candle. Open close. Let me look for an example where an open close candle got disrespected and coming. Let me check another pair. Let me check JBP USD. JBP. And you like the strategy I'm showing you guys here, it works on both currency pairs, synthetic and cryptocurrency. So depending on the one you trade, so we can be learning with the currency pairs because it has a replay bar. You understand? While Deriv doesn't have a replay bar, like the Deriv trading view is not that flexible enough. So we will be looking more into currency pairs for the teaching. But it's all the same chart and all the same analysis, same trading. JBPUSD Forest. Okay. I'm looking for a perfect example here. Let me check for about time frame. And on this derivative pair here, this volatility 101S, if you look closely here, you see what the market did here. We have an V-shaped key, A-shaped key level here. We have an A-shaped key level here. And as you can see, the market broke above this key level here. This is an A-shaped key level. It broke above it. What do we have here? The market just retested it and bought to the upside. It bought to the upside. So what I'm expecting from this market currently, I expect this liquidity here to be taken. Then buy from this particular V-shaped key level that got disrespected and got disrespected again to the upside. I'm expecting a buy from here. So I'm still looking into the market. So let me show you. Do you guys know more about QMR? Do you know if you have experience about know how to use QMR entry?
Yes,
Are you there? Okay, you're familiar with QMR entry, right?
No.
Okay, let me show you guys what QMR looks like. Let's say we have something like this. Something like this. Let's say we have an V-shaped key level. What do you expect from this market? We expect a buy from here. We expect a buy from here. But in a situation whereby the market broke below it to the downside aggressively, what do we expect? We expect a sell from here. But in this situation, the market broke above it again. We can still use this same key level here. We can still use this same key level here for a buy. This same V-shaped key level that got disrespected to the downside, got broken again to the upside again. We can still use it for a buy, something like this. We expect a buy from here, from that same key level that got disrespected twice. We expect a buy from there. So the same thing that I'm expecting from this particular market here, this volatility 101S. This V-shaped key level got broken to the downside. We expected a sell from here, but it bought to the upside, broke that zone again. What do we expect? We expect the market to come back and buy from here. We expect the market to come back and buy from here. Something like this. I hope you guys are understanding. same thing goes to sell also. Let me look for a scenario here. Let's say we have an A-shaped key level. We have an A-shaped key level, and we're expecting the market to like sell from here, right? We're expecting the market to sell from this particular zone. But in this situation, the market broke above that zone aggressively to the upside, or even if the candle closes above it with a body. What do we expect from this market? We expect a retest of this same zone that got broken, right? We expect a retest of it, but the market still broke it to the downside. They broke it to the downside. What do we expect? We expect market to retest that zone again and sell. So this is more like a manipulation to the upside, drop again. Then we expect a sell from that same zone that got disrespected. Something like this. So this is what we call QMR entry. This is called QMR entry. So let's look more into. I hope you guys understand this A shape and B shape key level. So we will be using what we will be using for analysis is daily time frame, 4 hour and 1 hour, and sometimes you can go down to 30 minutes time frame to look for a key level, because key level on a higher time frame are very strong, unlike the one on lower time frame like 15-minute time frame and 5-minute time frame. All those ones are not strong, but the key level on higher time frame like daily, 4 hour and 1 hour are strong key levels. So in this situation, so this is an open close candle. This is an open close candle also. I'm coming. This is an open close. This is an open close. This also is an open close. Hope you guys understand what I mean by these open close candles.
No, I don't understand.
Okay. Okay. So like in a situation whereby like candle closes, like if a candle closes and another candle opens, where that first one, the one that closes before let's assume we have this candle is still running and it closes, this one opens. This particular zone here, this particular place is an open close candle, and it is also can be used for buy and sell. Okay, let me show you some example also. This is an open close candle. This is also an open close candle. This also is an open close candle. It can be used for buy and sell. The same way we are using V shape and A shape key level for buy and sell, depending on how markets react to them. Let me look for more example. This also here is an open close candle. There are many on the chart, but you cannot trade all the open close candle you see on the chart. You have to like wait for reaction from the markets, like markets closing like below it or above it, like projection of candle. You understand? Let's assume now we have okay, let me show you guys something here. We have an open close candle here. The market sold from this one here. Did you see? I'm coming. Did you see this where this market closed? This bearish candle closed. Another one opened. So this is an open close candle. And what did you see? Market came there, tap into exact zone, like exactly same zone, that same open close candle, and it sold to the downside. So, but you cannot trade all the open close candle you see on the market because you need like more confirmations from the lower time frame to back it up. So let's assume we have an open close candle on a daily time frame that's got like market rejects from. Then we go to the 4 hour and look for more confirmation. Like we can look for like breakouts and other confirmation from the lower time frame for just for the setup to be like a high probability. You understand?
Yes, sir.
All right. Okay, this was the setup I had this week. That this some days ago. Well, what was I expecting from this particular market here? If you look very well on the line chart, we have an A-shaped key level that got disrespected to the upside. Market broke above it, or we can still use this particular one here. Or this is the extreme one. This A-shaped key level here. What did market do? Market broke above it. It's a body. Break below it again. What was I expecting from this particular market? I was expecting market to take out this liquidity here, come to this particular key level, KMR, depending on what people choose to call it, but this results we call KMR. We expect the market to like take out this liquidity here, then sell from this particular key level here, this particular A-shaped key level that's got broken to the upside. We expected a retest of it for a buy, but the market broke below it again. What do we expect? We expect the market to come back to that particular zone and sell. So you guys should understand this particular QMR entry. Like you guys should understand what the market is trying to do. Like uh, something like this. What the market does always is uh, A-shaped key level. We expect something like this. Something like this. And we also expect something like this. Um, expect something like this. Something like this. The same thing goes for, this is for, let's assume, this is what we expect from the market to sell from here, but it broke above it. We expect a retest of it for buys, right? We expect a retest of it for a buy. Then in this situation, the market didn't retest it and bought and buy. What it did is that it broke below it again, retested that same zone and sold. So this is what we call KMR entry. Then this is what we call flip zone. That is what I choose to call it, but depending on the name that other people might call it. This is just called A-shaped key level turn into support, right? An A-shaped key level turn into support. You understand? The same way if a V-shaped key level got broken to the downside, it turned into a resistance, right? It is also called flip zone, depending on what you call it. But to make it more simple, you can call it a resistance, right? Let's say this was a support. Let's say this was a support. Market broke below it. We expect a retest of it and set to the downside. So this is like a support turned into resistance. And this is also like a resistance. I'm coming. This is also like a resistance turned into a support. And this is what we call a KMR. The same thing goes for buys also. Same thing goes for buys. Or let me use this. The same thing goes for buy. Something like this. We expect a buy. So we expect a buy from here. Market broke below it. We expected a sell also, and market still broke above it again. Then what do we expect? We now expect a buy. This is like a high probability setup, but backing it up with liquidity make it more probability. So you guys should like try and understand these key levels because it's very very important in when it comes to trading SLK. You have to like train your eyes to understand what the market is trying to do. Let me look for more chart example. Let me look for more chart example. Okay. So you see what the market did here. If you go to the line chart, what the market do here? Like the market, this is an A-shaped key level, right? This is an A-shaped key level. What do we expect from the market? We expect a sell from this particular zone, right? What did the market do? Broke above it to the upside, right? What do we expect from this particular market? We expected something like this for a buy continuation. But the market did not buy to the upside. It still broke below that zone to the downside, right? So it broke below it to the downside. What are we expecting? We expect market to retest this particular same key level here. This an A-shaped key level that got is reflected twice to the upside and to the downside. What do we expect? We expect something like this, and we expect a sell. And that is what the market did here. And this is daily time frame. I hope you guys are understanding what I'm trying to say here. So this is what we call a QMR. QMR. Let me I'm looking for something here. Okay. So this is what we call QMR.
If the value is not too,
You said?
must it be both for the PMR to be valid to the A or the B shape C level the broken with body. What it is broken for you?
Okay, with a body. Okay. Okay, you mean if for a kill sorry. You mean for an QMR to be valid, it has to be broken with a body or a week. Right?
Can you go to the body already?
It depends. No, even with a week, it is still valid because that break is just like a skew, which is a manipulation of the market to the upside, right? A manipulation of the market to the upside. So I'm coming. Let me give you an example. Let me look for an example. What is even wrong with this? I'm coming. Okay, sorry. This was actually disturbing. Okay, in a situation whereby we have something like this, something like this. We have something like this. Uh, we have something like this, right? So in this situation, what happened here is that the market swept liquidity to the upside with a wick, right? This is with a wick. So the market swept liquidity to the upside. That is a manipulation to the upside, and it's sold to the downside. We can still expect a sell from the same zone that the market manipulated. You understand? So it doesn't matter sometimes if it is a wick or a body, but for a high probability, if it is with a wick, it is more probability. But sorry, if it is with a body, if it broke to the upside with a body, closes above it with a body, it is more probability than with a wick. You understand? So even with a wick, we can still sell the market to the downside like this. You understand? What mattered is that the market respected this particular zone here to the upside, broke below it again, and retested it again. So we expect a sell from that same zone again. Do you understand now?
Yes.
All right. So what I'm trying to do here is that I want you guys to like understand uh key levels, like with what I've taught you guys here, like key level. Just go to your chart and like observe the chart. Understand this key level here. This is an A-shaped key level, right? And this is an V-shaped key level,
Mm.
right? This is a V-shaped key level, right? Just go to your chart or open your chart, like observe it on the line chart, right? It's very clear on the line chart. Just turn your chart to the line chart. We have this A-shaped key level here. We have this V-shaped key level here, right? So we have several of like key levels here. It's very, very clear on the chart by using a line chart. It's very, very clear here. I hope you guys can see it. This
Yeah.
this is supposed to be used for a sell, right? Let's see what the market did here. Market broke above it. What do we have? Market broke above it, and the market retested it here. This particular look at what market did here. Retested it and bought to the upside. So this would have been a very nice trade, something like this. And one good thing about key level is that if market respects a key level, it is not going to be sometimes it's not going to be a deep drawdown for the market to buy or sell. You understand? Something like this. You should have a clean, nice trade